Hello and welcome to this episode of Parley, the Hindu's weekly podcast where we delve into pressing questions of public importance with insights from experts. I am Ashokamithran, your host for today. Question for this week is: are Indian startups not scaling up on innovation? The Union Minister of Commerce and Industry Piyush Goyal criticized startups for not innovating enough and limiting them. The Union Minister of Commerce and Industry Piyush Goyal criticized startups for not innovating enough and limiting themselves to grocery delivery while speaking at the Startup Mahakumbh held at New Delhi last week. Social media was filled with startup owners, venture capitalists, economists, and academics taking both sides of the argument. Some agree with the minister's statements, highlighting that profitability of startups and their financial methods, while those who are against it cite the lack of conducive business environments for startups in India. To discuss this, we have Professor Thillai Rajan, who heads the Research Center on Startups at Indian Institute of Technology, Madras, and PK Jayadevan, who's an author, communications professional, and former journalist. Welcome to the show.
Thank you. Happy to be here.
Thank you, Ashok. Happy to be here.
So let me start first with a question to both of you. What do you think of the minister's statement at the Startup Mahakumbh? What stands do both of you take? Do you agree with the minister? Let's start with Jayadevan, sir.
So I like to take a positive view of comments, right? In that sense, I think it started the debate. And this is a debate that has to be had, especially in India's context, right? Given where we are with AI and, semiconductor chips and a lot of these technological frontiers, we don't hear these debates in mainstream anymore. So I think the timing of it is, great. We can, of course, disagree on the substance of it, which a lot of people have taken sides, as you rightly pointed out. So I think it adds to the discourse, and I think it's a positive thing.
Professor, your take of the statement?
So I will try and give a little bit elaborate response here. So if you really look at it, startups, they just thrive where the ecosystem helps them to flourish. So it's like the ecosystem has to have appropriate conditions so that the startups can thrive. So if you're really looking at startups, necessarily startups are engines of innovation. But are they innovating enough? So that means generally the flavor is that are they essentially kind of looking at commercializing science and technology based innovation? Because that's a connotation that generally comes to mind. Because if you look at innovation as a spectrum, people always consider S&T based innovation as possibly the highest order of innovation for various reasons. I'm not saying that it's right or wrong, but for various nations, science and technology based innovation is considered as the highest in the innovation spectrum. So if that being the case, are we having startups that are really looking at commercializing science and technology based innovations? Right? So that's basically the question that comes to mind. See, if you really look at that perspective, let's look at the number of startups. I mean, not considering only DPIT registered startups. If you look at all startups and consider sectors that are presumably innovation driven, which is possibly deep tech driven sectors. Out of about 250,000 startups, the number of startups that qualify to be under the deep tech sectors is about 72,000. I mean, I think is a very healthy percentage.
Yes.
So yes, today there is adequate amount of activity and interest among the startups to venture into what is called as deep tech sectors. But are they scaling up? Are they thriving? So that's an interesting question that we need to talk. So essentially, if you look at it, the capital requirements of the deep tech startups are necessarily going to be higher in the initial phase itself, right? I mean, it's not that they need capital at the time of scaling up. No, they need capital much before during the gestation phase, during the product development phase, during the commercialization phase. So that's they need significant amount of capital. I mean, during this phase, there is going to be zero revenues coming in, and no one is even sure of whether the revenues will come at all, whether the products that are developed will meet the regulatory and compliance requirements,
Right.
and whether they'll be able to make the product come to the market before a competition does, and all of that. So therefore, the level of risk is very high. So under those circumstances, the deep tech innovation startups carry a very high level of risk. So this high level of risk capital, who can actually provide? Right. So if you look at this innovation as a spectrum, so basically we're talking about basic R&D, then you have translational R&D, then you have commercialization, and then you have product development, and then subsequently go to market scaling, and all of this different phases come in. So we need an adequate amount of risk capital at the translational R&D.
Could you please tell the viewers what translational R&D is, so that
Okay. So as I was mentioning, there is a basic R&D, and then there is a translational R&D. So what I meant by translational R&D is that from the lab, when we actually have to get it into the market, there is a lot of dynamics that is involved, and so to be able to kind of take a fundamental basic research finding or an output and to make it into a form that can find ready use among various users and so on, that is called as translational research.
understood?
So lab finding is not directly consumable, right? We will have to kind of find a way in which it can be made suitable for our everyday use, right? So that process is in a way is called as translational research. So when you're talking about startups, the startups are playing a very important role. The deep tech startups are playing a very important role in managing that jump between basic research to commercialization, using the process of translation research. Significantly, there are many departments, many universities that are engaged in translation research. Most of the startups don't really look into translation research, but then they take the baton after the translation research is completed in the labs in the universities, and then the findings are then commercialized by the startups. So there is a high level of risk that is involved in the process, because as I was just mentioning, initial investment is pretty high before we can actually see a single rupee coming in terms of revenues. Right. And the biggest appetite for that kind of risk is largely the government, right? So not only in India but even in developed countries, fundamentally governments is the ones that can provide that kind of high level of risk capital. Right. So if you look at India, there is significant amount of capital that is being provided by the government at the early stages, right? For example, the Startup India Seed Fund Scheme, right, which is one of the significant sources of funding, early stage funding for startups. If I look at it, there are about 2,500 startups nearly that have got funding from the Startup India Seed Fund Scheme. Out of these, about 1,360 startups belong to the deep tech sectors, right? So that means you're talking about a ratio of about close to 56-57% of the total companies that have been funded on the Startup India Seed Fund Scheme has actually gone to startups that are possibly in the higher end of the innovation spectrum, which are the deep tech sectors. Right. So what we are today looking at is a very environment is favorable, but then what is problem is the quantum of capital available is very limited, because Startup India Seed Fund Scheme gives a certain amount of money. I think it's about 50 lakhs, but then that's not adequate. Right? There has to be subsequent follow-on funding that has to be provided, and today the realization is that there has to be private sector capital that will fill in after the initial government support. But
How
I
many
think
times that would, how many times the 50 lakh do you think that is adequate for capital funded? Like,
So I can add a small anecdotal evidence here. So, from 2020, Facebook invested $1 billion every month into virtual reality, right? Which means they lost almost $45 billion of money from 2020 to like the next few months, right? Like in
right.
few years. So we are nowhere close, like in terms of the capital that needs to go into deep tech.
Understood.
so the emphasis is there in terms of investing in deep tech, but then there is significantly very lower amounts that are getting in, and that is not going to be enough for them to see the light of the day, right? And then they need a lot of capital before they can generate products. So recently there has been for example, you're talking about the Anusandhan National Research Fund that's been set up by the government, largely to really look at translational research and products that can be commercialized. So they are really talking about, let's say, 150 crores. So that I think is some reasonable sum that people can talk about in a sector or a project to really come out with kind of impact. So the chasm that exists between the initial seed capital that government supports and then subsequently the funding that actually happens from private sources like angel investors and VCs and so on, that needs to be bridged. Right now, that the chasm is still very wide enough, and as till that is bridged largely by government funded risk capital, we will possibly have a situation where there are many startups at the very, very early stages in the deep tech sector, but then very few are able to break the ceiling and then become prominent, not just at the national level, but even at the global level.
Understood, Professor. So we were talking about the funding shortfall, but I would like to take a step back, and because we were talking about innovation also, how do we define innovation for the purpose of funding? That is, how do venture capitalists or startup founders define innovation? How do they know that this is the product that's been innovated and this is not innovating? How do they make the choice between a new and a not so new idea? Because I think that is where we will get a view. I feel we'll start with Jayadevan, sir.
Sure. So, I've been covering startups for many years, right? Like, and in the, we are at a very early stages of, as an ecosystem from a startup point of view. So, in the early days, right? Like innovation meant just being able to order stuff online, right? Now we have quick commerce and all of that, and that means innovation too. So we cannot put them down. Now, what's happening? I remember like back in 2012, 13, like, I had met this early stage fund which was trying to invest in deep tech startups. Now they came up empty handed saying, hey, to Professor Rajan's point that, there weren't enough startups that were translating from and commercializing from R&D, right, in India. And they just wouldn't deploy the funds at that point. Now, number two, see, end of the day, venture capital firms have a thesis, and some of them, are made large bets on Indian consumer story, right? Like where you are talking about digitalization and digitization of that. And that was the era until 2015, 16, 17, all of that, right? And we saw large companies come out of it, Flipkart, and a bunch of others. That's the e-commerce era. Now we are seeing smaller funds, we have several like smaller funds which are going into deep tech, not nearly enough. But then you could also argue that, it's venture capital is sort of betting on the future, right? Like now, in today's world, if you look at, hey, where do I want to deploy large amounts of capital? Like, I would say, if I'm a venture capital firm and most of these funds come from the US and, American LPs, right? So they will look at where is innovation happening? What is the, largest space in which innovation is happening? You'll come up with things like, artificial intelligence. You'll come up with, things like perhaps blockchain based innovation, electric vehicles, mobility, and all of that, right? So they will be like, hey, I have enough and more, startups and founders and talent to back in my backyard. Why would I go uh, across the ocean, and invest there where I don't even have a lot of understanding of the market, right? That's point number one. So from a venture capital or a LP perspective, the important thing to note is they end of the day have to show returns, and they will make the bets that will give them the highest chances of success, right? It is already a risky business, but they do expect returns, and they have a 8 to 10 year horizon. So where can I deploy my capital? So then there are innovation ecosystems which you will see, San Francisco, or you'll see places in China, you'll see Israel, you'll see Bangalore, you'll see Bombay and Delhi, all of these coming up. But when you, in comparison, given where we are now, it feels like some of these ecosystems are ahead of us, right? So that's one point of view. From how do we ascertain where the capital needs to go in, right? Like from a VC firm perspective. That said, many of Indian VCs are now like sort of taking a very long bet, which is, can we see India into the next 10 years, right? Like, are we seeing, the manufacturing story play out, smart manufacturing, companies like Aether have come out of IIT Madras, right? Like, students, right? Yeah. Talent, right? Like Perplexity's founder, again, IIT Madras, unfortunately he's in the US, but, so we have the talent. I think, the capital will follow. It's just that we need some more cushioning to retain all of them in the country, right?
Professor Rajan, your views on how one measures and defines innovation?
I think innovation really means, particularly in this way of risk capital investing, in terms of the benefit it gives to the users.
Right.
I think if you really look at science innovation, that doesn't really look at benefits to the users. It's really look at science for science sake. I mean, there's excitement of working in science, excitement of working in new technology, coming out with a new finding.
Right.
But if you look at innovation, there's really a commercial element attached to it. Are the users going to get benefited? Is there a new product that is going to come out of it? Are they going to save time or cost? Are they going to get a new experience as a result of using this product? So that, I think, is what really people are talking about innovation. Now, when we really look at innovation from that perspective, people try to kind of assess the impact that it can create. First is, can the innovation give any competitive advantage that can be sustained over a longer period of time? For example, patent gives a competitive advantage by giving some protection to the intellectual property, and then ensuring that competition is kept at bay, at least during the patent regime.
Right.
So if that kind of protection is not available, and then howsoever great an innovation could be, it will not attract the interest of investors, simply because the capital might not get the returns that it will. Second could be in terms of the market. It may be a great innovation, but then unless until the innovation addresses a need in a growing market, there will not be many backers to it.
Right.
I mean, as they say, right, today will there be a market, though somebody invents an excellent mousetrap, very innovative mousetrap, there will be no market to it, right?
Yeah.
So it's just not the innovation per se, but then the other features that kind of defines what you may call as a great innovation, right? And that essentially is the competitive advantage that the innovation provides. Does it address a need in a growing market? Is the innovation going to give greater margins? Will the consumer be willing to pay a premium for accessing the products and services? So it is those things that largely determine which innovations get commercialized and which innovations do not.
Right. But I would like to counter you, Professor Rajan, on this, just for the opposing view, that if we look at the two very big startup stories in India, if we can call it, is Swiggy and Zomato in the quick commerce area, quick commerce and food delivery area. Both of them were uh, backed by process. I think Swiggy was backed by Process and SoftBank, and Zomato was backed by Sequoia Capital. Both of them, like Mr. Jayadevan said, that they would have had a thesis for an industry that was backed by consumption, India's consumption story. But when they went IPO, they did not really do well. Now, and I think Swiggy and Zomato, both of them were downgraded by Bank of America recently. So, do you think um, it is this is also a innovation? Because uh, at the end of the day, uh, consumption story of India is beyond what these two have tapped as a market. And why do you think exactly this failed if what you were saying were to be true?
Well, actually, that's what what I meant was, we need not look at innovation where innovation may not be the main driver. Right? For example, execution and implementation can be a very, very important, driver of certain businesses. Right? How somebody has been able to understand the industry and the needs of the customer, and if we can able to effectively address the needs of the customer using technology and different business models, those are recipe for success. I mean, it's not that every business should actually have a patent to start with, and or some innovation to start with to build a great business. And having built scale to a certain size, naturally there can be a certain nucleus of innovation that can crop up, that are relevant to their particular business, and over a period of time these innovations could get strengthened further, and that can give more competitive advantage to the business, right? So innovation is not a critical for the conception or the growth of the business. Execution is critical. Implementation is critical. Now, having said that, I wouldn't really call these these businesses as, I mean, you said that they may not be called as successes. That may not really be the case. For example, today I think Zomato is part of the index, right? Stock market index.
Yeah.
So for a for a startup company to be a part of the stock market index is really a big achievement. I mean, I think they have just gone one step above than an IPO. If IPO is seen as a crowning glory of success for a startup and for the investors who have invested in the startup, going one step ahead and then being part of the index itself, I think, yeah, I think it is it's a good achievement. And
the second largest, I think after Hyundai, they were the ones, they got in 11,000 crores, which is their ask was the second largest last year.
yes, so all these are in some sense indicators of success, because it is when they get into index, it also talks about the sustenance of the business, right? I mean, obviously many people are evaluating it. Nobody would want to incorporate a company in an index that might be seen as a fly-by-night operator. That's not That's not good, right? So therefore, the company Zomato really is being passed through multiple checks, and people are convinced that about the business longevity, and therefore they have been incorporated as a part of the index. So I'm sure, I think there may be short-term blips in terms of the responses during the IPO and different cycles in the stock market. That is part and parcel of any company's journey. But if you look at these major milestones, I think they possibly have tick marked several good things that any startup founder would aspire for. And necessarily, business might not have started with a major innovation like a deep tech, but then they kind of possibly understood the customer need, and then went about executing it in a way that most valued by the customer in terms of time savings, in terms of giving choices, in terms of predictability. All of these are in some sense things that are valued by the customer, right? And then over a period of time, if they have been able to bring in some innovation that can give them some competitive advantages, that's good, right? But we need not use the same innovation scale to evaluate all businesses. That is my opinion.
Got it, sir. Sir, let's. I will come back to the consumer story a bit later, but I would like to understand. 10 years ago, uh, the government was gung ho about the startup story of India. The Prime Minister, his whole cabinet, the Startup India scheme was started, and although you spoke about the lack of funding, but what has been the result of the Startup India push that the government started? Has it borne fruit? Has it been completely efficient? We'll start with you, Professor Raja.
So, as I had written earlier in another article as well, Startup India is possibly not really Startup India, but the emphasis on startup policy is possibly the most wide-reaching policy focus of independent India. I mean, it's very difficult to believe, but I think the fact speaks for themselves.
Right.
So today, if you look at it, there are at least 20 ministries of the central government which actually have a dedicated policy or a program targeted at startups. We talk about the Ministry of Health, Ministry of Information and Broadcasting, Ministry of Backward Classes, Ministry of Heavy Industries, Ministry of Petroleum and Natural Gas, which you just name it, right? Ministry of Mines. So such a concerted effort by multiple ministries I have never seen in any of the priority areas, right?
Right.
And second, if you look at the impact, the number of startups that have actually been formed, I think it's truly numbers that one can be proud of. I mean, people can always talk about, are these original startups, or are we seeing more copycats and all that? But at the end of the day, we have some reasonably good numbers to report to. There are, depending on which numbers you're looking at, DPIIT has about close to 165,000, 170,000 startups. In our own platform, we have about more than 250,000 startups. So these are numbers that are fairly large, and this kind of indicate that the startup policies have been able to capture the imagination of entrepreneurs, and then encouraging them to start ventures. Third is the capital that has flown in these ventures. So the total capital that has flown that has come into this is really huge, right? For example, if you look at equity itself, there are about close to, I would say, 15 lakh crores of capital that has flown in, right? And it is not a phenomenon that is restricted only to equity.
Right.
Today, we are also seeing significant amount of debt capital getting into the startups. In fact, getting the interest of banks to invest in this risky businesses, that in some way I would see is the biggest success that has been achieved in the Indian funding front.
Right.
Because banks are traditionally very conservative in terms of the businesses that they invest in, and basically they have to safeguard the depositors' funds, and naturally they are going to be risk averse. But to have about 11 lakh crores of capital from banking sources to invested in startups, I think that speaks for something. That indicates that the startup is here to stay. The startup focus is here to stay in the country, and it is going to play an integral role in India's ambition of becoming a developed country. And not only is actually happening in the central government today, most of the state governments having a policy on startups, starting from the northeastern state like Meghalaya or Assam, or to the developed states of the south like Tamil Nadu or Kerala or Karnataka. Right? Large states have a startup policy for the respective states. Right? So, to this extent, if we combine all of this, I think the entire initiatives taken by the government towards promoting startups, I think the impact has been terrific. I mean, as a part of my role at IIT Madras and also otherwise, I interact with a large number of youngsters on a daily basis. And the interest that I see for them to really venture on their own has been truly phenomenal. And that has actually been possible because they see a lot of positive vibe in the ecosystem today. There is encouragement for people to take risks. There is encouragement for people to innovate and come out with solutions for their problems. Right. So this I would consider as big impact of the startup policies of the government.
Mr. Jayadevan, would you agree with the professor on this?
Yeah, absolutely. So, to a large extent, it's mainstreamed entrepreneurship, right? Like, 10 years ago, it was still taboo to say, oh, I want to start up on my own. If you have gone through the traditional education system, you have an engineering degree, you have management degree, you don't want to sort of risk it all and start a company, right? Like now, everybody wants to start a company. So there's been a huge mindset shift backed by very positive commentary from the government, and all these enabling policies, right? Like, and on top of it, some amount of seed capital as well, right? I think where we miss again, is I'm just taking this back a little bit to the consumption story. And the challenge is we are literally tracking the journey of, say, China or the US, but we are very behind, right? In terms of time.
Yeah.
So US shifted manufacturing to China when it had trouble with Japan and the yen crisis. And to manage that, they wanted to shift manufacturing to China, where they could find cheaper labor. There was a lot of intellectual property and design and all of that which got translated to China. Now China saw that as an opportunity to create employment, grow its own market, and also learn from the American companies, right? So Nike and all of these manufacturing companies shifted. This was in the 80s. Now China also, on top of that, they built their own telecom networks. Then they built your Alibabas and your Tencent and Baidu's and all of these companies, the internet companies. Like we've had parallels in India, right? With Flipkart and others, right? Snapdeal and all of these companies. So now China and this is all, none of this is in serial, right? Like, so things happen in parallel, but a little bit of overlap across. So Alibaba, Tencent, China, Baidu, and all of these guys came in. In the meantime, they were also launching microsatellites. They were also talking about artificial intelligence and data science, etc. Right? China also had a very nationalistic view of technology, which said because it's a closed ecosystem, they always wanted to be more self-reliant with respect to technology. So they said, hey, we want the most number of hardware and software used to come from within China. So I remember I was at the Ant Financial's headquarters once, and outside the Ant Financial is the financial arm of Alibaba, right? So outside their, one of their offices, they had a huge IBM mainframe computer, right? Like on which all the engineers had signed and stuck sticky notes. So I asked them what that is, and they said this is the last piece of American technology that we have in our office, and we celebrated by moving it out, and this is like a memory for us kind of in it. So they have this very make in China kind of point of view for not just manufacturing but also software and software product and all of that. So they had their own social networks evolve, WeChat. They had their own internet companies evolve, like instant messaging, gaming. All of these companies are very Chinese, right? Like now India has always had American companies, so Facebook we use, and I'm not saying debating the pros and cons of it, but this is how it played out for China. So the ecosystem matured much faster. And now coming to the consumption part, right? Like China's consumption economy also grew in a big way. So 12-15,000 US dollars, per capita GDP is really good for digital economy, right? Like we are still around 2,800, 3,500, USD, right? So now here we don't have that kind of money to spend. Like, boils down to that. So even though our companies have had exits, our founders have had exits, we have cash-rich companies like large technology service companies which are sitting on boatloads of cash. They hesitate to invest in risky propositions, right? That's not the case in other ecosystems where a lot of money is going into frontier technology, like and that's where I feel like we are lagging, like primarily like the consumption story, the India story, the economy story has to move forward, has to grow. And for that, there are certain enabling criteria that needs to come in. And from where, you will see a lot more money going into the frontiers, right? Which is obviously risk capital.
I would like to double click on what you said about the nationalistic dream. Are you speaking about some sort of an import substitution kind of a concept for India? You think because anyway, all our big or many of our big startups are funded by Japanese PEs or Black Rocks or you know again Sequoias of the world. So do you think that financing people should also be Indian? Only then that will happen.
I mean, not necessarily. If the market is promising, capital will come from anywhere in the world. So it can be, a Sequoia as well, right? Like it can be Google's venture capital arm, and they have done investments in India. So it can come from anywhere. But yes, there is, more need for Indian, homegrown venture capital firms, and rupee capital, if I can call it that.
Professor Rajan, could you please tell me uh, what prevents startups from going up the value chain or becoming bigger? Mr. Jayadevan had given his points on the uh, obstacles or challenges, if we can call it that way.
So there is a natural selection process that works in the economy, in the sense that uh, the survival of the fittest and people who are able to weather the competition a lot more effectively are able to scale up. But again, the the, uh, the issue is the support that's available, right? So the support that's actually available is being kind of distributed to a very large number of startups, so that the quantum becomes very little for each and every company on its own. So that's so essentially, fundamentally looking at it, should we actually give small amounts to large amount, or should we actually give large amounts to a small number of companies? And in the Indian context, I think by and large, for the startups, the government has been trying to give small amounts to a very large number of companies rather than the other way around. Many of the major support that the government has provided has also been availed by the larger companies. For example, the PLI scheme and all of that, which has been very successful in terms of the investment that it has been able to generate, has by and large gone to the bigger companies, right? Not really the startups. So I think the quantum of support that is needed has to be substantially higher for the startups, because the risk capital itself available in the country is very low. Still, a significant amount of risk capital flows from external markets like the US primarily. Right? So till we are able to find a good pool of domestic capital, I think there has to be support provided, substantial amount of support provided, so that we may be able to find a few winners. For example, today, if you look at many governments have they have these festivals called Global Investor Summit, right? And all of these global investor summits are essentially targeted at the bigger companies. Can we have apples of the world to come and invest in my state? I'll give all the facilities possible. Right? I can invite maybe Ford or Hyundai. Larger companies. They get all the attention. So can we have similar emphasis for the startups as well, right? Today, I think startups are also getting significant amount of investments, right? For example, if you get on unicorns, the kind of capital that they are able to attract is pretty good. So these kind of large investor summits that I'm talking about, the narrative is largely targeted around the traditional heavy industries by and large. Can we also bring in the startup narrative to these investor summits? Not just large technology companies, but even early stage innovation companies. Right? So if you can bring those kinds of not just capital, but the enabling conditions that will make the entire process of growth a lot more easier and a lot more smoother, then I think it will be much more easier for the startups to scale up. Even if capital is available, the kind of transaction costs that are involved in managing that growth happen can be sometimes beyond the capacity of a startup, because they may not really have the large bandwidth or the management know-how that large companies have by virtue of several years of operations. Conglomerate, by virtue of their long years of operation and connections, they may possibly be able to maneuver things a lot more effectively than a smaller startup. Right? So my thought here is that can we really also bring in the startup narrative in this large government focused investor summits, so that there is adequate enabling provided? Because when government provides, let's say, 100 acres of land, that immediately helps a startup to scale up much faster. Right? That immediately helps the startup to get more visibility. Today, the scale and size are becoming paramount importance to create an impact. And in addition to capital can help you to achieve scale and size. But in addition to direct capital, if there is an enabling framework that can be provided for the startups to effectively utilize the capital with the least amount of transaction cost, then I think it will be very beneficial. It will help more startups to actually go up the growth path. And currently, there is always a feeling that many startups are not able to clearly break that glass ceiling. There are not many startups who are able to cross that unicorn. So that thought process will possibly slowly recede if there is also support for the startup growth.
Got it, Professor Rajan. I would just like you to give me a quick response for this question, for the follow up with respect to the minister's comments. Do you think Indian governments have not started taking startups seriously?
No, they have started taking startups seriously. Several instances exist today. Space, which was supposed to be a holy grail for government support, today the space segment has been opened up for startups to participate. Railways, which is once a holy grail for government, today railways is proactively looking at engaging with startups. Defense, there is so much of involvement that is actually happening in terms of engaging with startups. So every sector has been today opened up for engaging with startups. But then I think all of this also needs to have more muscle to it, right? Muscle in terms of making the whole process a lot more smoother, right? One is to really have in paper, we have excellent schemes and all of these things. But then on the ground reality, I think startups are also a lot of frustration sets in, right? In terms of, yes, I mean, I'm not able to kind of effectively utilize it because of there is a lot of red tapeism, there is a lot of bureaucracy, which is enabling me my life a lot more difficult. So
Right.
now,
So, yes.
yeah. So in addition to these intentions, the seriousness with which the government shows, if it can be followed up with appropriate implementation measures, then I think many of these startups will find it a lot more easier.
I would like to go back to the consumption story we were talking about. And my India is a country with inequalities, and economic inequality is the chief among them. Today, big companies also talk about the trend of premiumization, when it actually just means that the top 50, or rather the top 30% of the consumption uh, group, if we divide them by deciles, are the consumers. The middle are uh, probably workers, and the rest of them are below the per capita income, probably don't even do that. And if we have to superimpose the market of consumption startup today, it is exactly that. That is the upper middle class, or rather upper class urbans people, would want quick deliveries, shorter work times. They would want domestic helps, electricians, plumbers, and that's when we have an urban company kind. And people are working for them. But if we look at the earlier innovation, if we can call it the first wave of tech in India post the independence, it was the IT revolution, and which sort of pulled a large bunch of people out of uh, misery and lack of education. The broad-based sort of growth, the IT revolution in India. Uh, do both of you think that that sort of a broad-based work hasn't happened? Because between 1990s to 2000, if we look at pure data itself, shows the number of IT companies and IT software revolution we did. Has startup failed to do that kind of a scale, and has it benefited only a bunch of people? We would like to start with you, Mr. Jayadevan.
So the difference, right, like between the IT, services business is that it was mostly time and material, right, and it was a labor-intensive business, and it really worked out at that point in time because outsourcing was picking up, globalization was a massive theme. We had great talent which was hungry, and we focused on servicing or integrating systems for larger companies like SAP and all of these companies, right? But were we building the products, the foundational products itself? No. So then the natural evolution should have been that, hey, and maybe perhaps a little faster as well, is let's build more software products, right? Like, and not always have like an SAP or, or an Oracle or, Salesforce and all of these companies at the other end, right? Like of which we are integrators. Now, second part is, did we get there, right? Like we did, and thanks to venture capital, in no small ways, like you had Freshworks, right? Freshworks, it's a really good success story which comes out of India from a first Indian software product company to go to the Nasdaq and list, right? So again, changed the game. Now you have so many startups coming out of the talent that was groomed within the Freshworks. The companies that got acquired, into Freshworks, the founders went out. They're all building startups now. Many of them are building startups, and they're all targeting America as a customer. So software product export, right? Like, Zoho is another great example. Like, so it is
Bootstrapped, right?
Zoho is completely bootstrapped. Yeah, so great example of software product being exported out of India, right? But could it have been faster? Yes, of course. Like, but did we do enough? Maybe not, right? So those are some of the things that we need to question, right? Like, from a from the question that you asked, right? Like that did we do broad base? Now with software products, the margins are higher, but it's not like us. it doesn't need 1 lakh employees like TCS needs, right? It needs it's not based on the labor arbitrage model. It's based on, hey, how much leverage can my software provide to the customer, and my margins depend on that. So I probably need 50 people, right? Like now with AI, we are talking about 100 people companies which can serve up to $1 billion of revenue, right? So I think that model is completely changing and it will get disrupted. Where we need to focus on, is of course deep tech, of course more products, of course things that give you more leverage as to the amount of work that goes into it. Now, will it translate to the economy? I believe it will. I believe once you have these founders, successful startups, second rung employees who have made like millions of dollars, they go out, they create more startups, they spread their technology and know-how and build more startups. I think that's how the innovation engine becomes bigger and bigger and bigger, and kind of really starts to have an impact at the grassroots.
I would like to ask a second question, and it would be great if Professor Rajan, in your response, if you could answer this also. That if
Can I? Hello. Okay, I just have something to add to what Jayadev said to previous question. The current startup focus has been a lot more secular than what it been earlier. Earlier, it was more unidimensional. Much of it was information technology, software, and so on. But today, if you look at it, the emphasis on startups is, I mean, may not necessarily be the right thing, but then it actually is cutting across all sectors, right? So we have in agriculture, we will have in textiles, we have in information and broadcasting, right? We have in tribal products. So essentially, what the current policy regime seeks to do is bring in an element of innovation even to those sectors which traditionally are not focused on innovation and so on, right? India has been traditionally an SME country where we really have very large number of SMEs across all sectors. Now the current focus seems to be that can we really look at having many of these SMEs wear and think like that of a startup, right? Bring in an element of innovation in their products and services, and thereby make them grow faster and make them also go up the value chain. I think is what has happened in the current the last few years.
You were talking about startups being actually more broad-based and secular, and the whole Mr. Jayadevan was also telling that there's more of a entrepreneurship culture has been mainstreamed, but we also see that a lot of the big startups today, all the success stories, they are shall we say limited to really big well-funded universities, students from there. What kind of a policy measure would sort of expand this? We need more than just one IIT research lab, right? We would want more from maybe within Chennai. So we would want one in Anna University or Tyagaraja College or a government engineering any other smaller government engineering college, because I think that's how do you think this can happen?
Well, I think it need not necessarily result in a situation where we have to create this kind of capacity, which has been very costly in multiple places, right? Because some of this capacity creation in terms of labs and infrastructure can be pretty expensive. On the other hand, if we can create a few facilities and then ensure that these facilities are used to the maximum possible extent, then I think that will be more beneficial for the society and for the economy as a whole. Right, today there are few, let us say there are maker labs and these kinds of spaces, and there is so much of spare capacity available in many of these. So that means the returns on the investment that has actually gone into creation this kind of infrastructure is not being very optimal, right? So we might have to create some very specialized centers, but we may not be create a very large number of them We can create it in different places. For example, we may create a specialist center for subject X in maybe IIT Madras. We can create for subject Y in a different location, and so on and so forth. But then we don't have to create 10x or 10y in different places, because that might not really give the give the maximum utilization of these facilities.
Got it. While we were talking about the number of people who start startups, the even in the consumption story, I was going through Swiggy's DRHP, and I could see that I think the pay to delivery partners per order was around 55 rupees, and that has come down from 60 rupees in the last three fiscal years. Um, there is it still remains, while it remains a success story, and on the success story for, let's say, the founder Sri Harsha was worth thousands of crores on the day when he listed, but on the same day Swiggy orders and delivery partners might have not increased their revenue. Do you think there is something that is going not very democratic or not very equal in the business model itself? Even urban company too, we had they were launching a startup kind of an innovative idea of just having domestic helps for 50 rupees. Somehow this looks like the informal economy is still informal, but there is a bunch of formal economy that benefits off this. Is this the right way to look at it? First, Professor Rajan, and then we can go to Jayadevan, sir.
Well, I think it all depends on how much risk is being taken by different stakeholders. I mean, the founder assumes a maximum amount of risk, right? And in case of a business failure, the loss of reputation, the credibility that they lose among the various investors, that's truly, which numbers can't describe. And more than that, I think the pressures that they have to go through in creating an organization, sustaining it, and ensuring that they're able to kind of satisfy the obligations of the different stakeholders. I think that's kind of it's truly mind-boggling. But how much is adequate for assuming that is something that's not something that he has determined. It's basically what the market determines in terms of by valuing the shareholding, right, that he has in the company. It's not really in terms of salaries that has been paid to him, but in terms of the value of the company itself that is translating into that kind of wealth creation. On the other hand, there is always going to be the questions of this inequality, and it is always a good thing that we need to have reduce this inequality. We can also look at how the others are also benefiting by an organized activity. For example, things are more predictable. Today, I think Swiggy can give a track record for any delivery person, how many hours he's likely to work, and then what will be the compensation that he might get, how many orders that he might have to deliver. Right, all of these things are becoming a lot more predictable, and all of this might not have been possible previously. So I think there has been definitely benefit to the other employees of the organization as well. But necessarily rewards goes to somebody who obviously has assumed the highest level of risk. A delivery person can today go be with Swiggy, tomorrow he can go with another company which possibly has a better scheme. But those kind of options are completely not available for the promoter, right? I mean, he is with Swiggy and he has to continue to be with Swiggy, and he cannot jump ship at any cost. So I guess I'm not here to say which is fair, whether the rewards are fair, but I am just saying that the risk that is being assumed by the founder are really of a very large magnitude. And they get rewarded if the venture is a success.
Mr. Jayadevan, I would like to add a small question to that, and you can kind of tell me what you think about it. That um, if we really look at people who uh, work and gig workers versus people like me and people like uh, anybody in the someone working in a JSW factory or a Vedanta factory, they are still part of a factory worker, uh, a shop floor manager, someone like that would still be considered uh, part of the formal employment system. But a gig worker continues to be a gig worker. He doesn't have a contract, and we've seen this story play out in multiple ways. Gig worker problems, labor rights, etc., etc. So, how exactly do you think is this business model uh, sufficient in terms of um, creating a large scale employment, because only by creating a large scale employment can we actually bridge class divides?
Yeah. So just see the whole gig work kind of business model, right? It relies on a certain economics of how this works out, right? Like, so to that end, I think companies will do what they can pay or what they can charge the customer on the other end, right? So if I, as a customer, value my time worth of going to the shop and buying food and coming back worth more than 30-40 rupees, I'm happy to pay for it, right? Now that shift on the consumer end only happens when the value of my time goes up, when I am doing higher order work, right? Which is again ties back to the GDP question, or the question about having a larger middle class which can actually afford to pay for the downstream economy, right? Like the labor downstream, right? So I think it all ties back in. At some point we will get to a more equitable kind of a growth, but these are early days, right? Like we should not judge a startup by we should not probably even apply these constraints on startups uh, to say, hey, we we need to go beyond what is what your business model can support, right? Like, because business can only support so much. So to that end, I would say it's fair. And then of course there are labor laws and everything else which come into picture, but that's and one has to assume that all of them follow it, right? So beyond that, I don't think we should be restrictive, or we should not dictate the economics of the market to the startups, because that's where they are trying to sort of make the model sustainable, right?
That way, if I have tried to double click on that, so there's a lot of macroeconomists keep talking about the import composition of demand, right? That is when we were talking about premiumization. That is just because there are more people who want the people who would buy or afford an SUV were left richer after the COVID, and people who would buy passenger vehicles or smaller cars where their real income stayed the same. So that way, if we superimpose the same logic, we see it here that do you think until and unless the needs of someone who's earning exactly the per capita income, or just maybe a little above the per capita income of India, which is 2 lakhs, is addressed by a startup, that sort of a growth might not come.
Right, which kind of makes it obvious that the per capita income has to go up.
Correct. Got it. So we have spoken a lot on what governments can do, or what is the policy push that's required. I would like the both of you to give me and the listeners a view on what exactly startups can do. Where do they slack? Because I saw multiple posts on LinkedIn by people who belong to the group that was pro Piyush Goyal, if I were to coin it that way, um, speaking about how revenue inflation and different types of valuations and pushing valuations up, showing lower profits. these kind of things. And HSBC also speaks about how the total addressable market of Swiggy will sort of stop at one point. Uh, so then, what exactly do you think startups should also be doing in terms of A, business disclosures and regulations, and B, just to scale up? We'll start with Professor Rajan.
I think so. Many of the startups are started by first generation entrepreneurs, and many of them are studying in top institutions and technology driven enterprises. And I would therefore think that the level of corporate governance in these newly founded companies, if they are also getting investment from VCs and so on, I think the level of corporate governance might be of a higher level as compared to the overall uh, averages that we might have across all businesses in the country. That does not mean to say that there will not be frauds, or there will not be any poor management decisions and so on. But I think on an average, this is likely to be slightly higher than the overall levels that we see in the market. Second, I think what startups should do is continue to do what actually made them a success in the first place, which is to continue to be innovative. Right? Because in a competitive marketplace, one cannot rest on the laurels of just one innovation, because competition will quickly catch up. And if there is no innovation in the long run, the ability to have a higher share of consumer surplus will diminish. So one will get only the market rates of return. Maybe in the long run, it will be basically just to look at covering up inflation. But if they have to continue to grow, if they have to continue to get that premium returns, then they will have to continue to be innovating. I mean, you have seen several examples, right? How Apple keeps on continue to innovate newer products, upgrades to the existing product. Right? So yes, innovation is going to be the mantra. That's what the gave a reason for existence for the startups, and that should continue to exist in the DNA of the company.
So I'll take this to Mr. Jayadevan with another B question to it. For every Aether, there is also a Byju's. What exactly how do we make sure, or what do startups founders today have to do to make sure they end up being an Aether or a Swiggy or a Zomato and not a Byju's?
Interesting question. I think the important part, like Professor Rajan said, is to have corporate governance in its right place and give it the right kind of importance, and operate with a very high bar of integrity and ethics. So, if there is anything that we can learn from Mr. Narayan Murthy and the folks who started Infosys and Wipro and all of that, is very high bar for corporate governance, and that gives you global credibility. And startups cannot afford to lose credibility in global markets, because most of the funding is coming into India through global investors. So once you have blemishes, they don't want to look at you again, right? So I would say set a very high bar of corporate governance and set a very high bar of innovation, like Professor Rajan again said, because innovation is what gives you the right to exist. That is your right to win, and startups cannot do without it, right? So just focus on that, these two things, right? Yeah.
So that is where we are at. Startups need to really focus on continued innovation and focus on catching up with the competition. And this is a long conversation. We can keep going on. But for the constraint of time, we'll have to stop it there. Thank you so much, Mr. Rajan and Mr. Jayadevan, for taking your time off your schedules and speaking to the Hindu.
Thank you so much. It's a pleasure, and it's an absolute pleasure to be a part of this along with Jayadev. I learned a lot from his views and thoughts as well.
Thank you so much. Great to be on this show as always.